Hey guys, what's going on? This is Leo. I just wanted to kind of give an update on a couple of things that I had posted to Reddit regarding AMC. Now, this was the chart I had posted, I think a week ago. But basically, I was talking about the gap fill, and in markets, typically whenever you have a, let's see if I can zoom in here. Whenever you have a gap like that where the price actually gaps up, typically the market is going to want to fill that. Now, what reason it wants to fill that price, it's hard to say. What I do know is that traders are aware of that and they typically stack up a lot of orders at these gap fills, which is why we see the price move off of that area. So that is exactly what we've done here. We went down to about $32, I believe it was 31.13. But that is also where you have the 100% extension for the Y wave of the WXY correction in an Elliott wave count. So that's a little bit more confluence. We can also see that you have the bright green dotted line here that's a pitchfork parallel. As you can see, I did the Andrews pitchfork going right here. And so that is just one of those parallels that's running off of the main channel. You also have, on a larger degree, you can see this pitchfork, and you can see this parallel. That's the 0.5 parallel, and it's also reacting there. So whenever you have a cluster of support, resistance, telling you the same thing, that's what we call a confluent zone, which means it's a high probability zone for a reaction off of that area. Now, going over to what I posted, it's like a day later, talking about the algorithmic selling. So, if you can see here, we have a Fibonacci retracement, and then prices retraced exactly to the 50%. The red line is going to be your 50%, this is going to be your 618, and this is going to be the 0.65. This is called the I refer to it as the golden zone. That's the way that it was taught to me. But basically, the algos start to sell, in this case here. If it was the opposite, then they'd be buying. So if you drew one going this way. But they start to sell there, and they'll continue to sell until it gets to 65. And then it just continues in this little series. And then what I was expecting for us to do is to move up here to break the golden zone, because then that would mean the algos have flipped and the algorithms are now on our side for buying. So if we come to the 1 hour chart and we zoom in, we can go ahead and take an update on those algorithms to see what they're doing. So we're just going to start exactly where I did before, and you can see that price went up to that 50, nothing new there. They ended up getting their target, the negative 236, so what they're going to do is they're going to pull from that next 50% retracement down to where prices went. And we have broken that series. So there's not going to be a series continuation there because this algo has broken. Now, whenever you have an algo series break, what's going to be your next resistance is going to be an overall pull. And there's actually going to be two here that I want to take a look at. So they'll start to sell this one next, and as you can see there, that's where your candle body's closed exactly, is right on that 50% retracement. Basically what these candles show is a little bit of rejection here. It's not too bad, really. This candle's inside bar, so it's considered rather neutral to me. But what you're seeing there is whenever the candle body closes, that means that most of the trading volume took place in this area. And basically what the wick is doing is it's showing there wasn't much trading that took place there, right? So prices pushed through and then it got quickly pushed back, and that's where it ended up closing. So that doesn't necessarily mean that that algorithm is going to succeed. It doesn't necessarily mean that they are going to drive prices down to the negative 236 around 2607, because you do have a larger algorithm at play, which is on the buy side. Now, I do know in the Reddit post I talked about how hedge funds can use this strategy of algorithmic selling in series with these measured moves and Fibonacci retracements, but it doesn't mean that all of these algorithms are doing this. So let's say that Citadel is out there and they're using it in a manipulative way, trying to drive down the price, but that doesn't necessarily mean that, just Fidelity, for example, doesn't necessarily mean that they are doing it to drive down the price. Typically, they just set it and they let it run, and it just trades different securities up and down, regardless of, they don't really care where the price is going to go. They're just trading what the price action is doing. So you have algos on both sides. And typically the larger ones are going to be the ones where you see the more significant reaction. But if we just pull this up here, I have this on a logarithmic chart, so I need to adjust that. Wait, no. What is that? Okay, so there we go. So, as you can see, oh, come on, TradingView, why are you not zooming in? There it goes. So as you can see, it dipped right into the golden zone. You got that double bottom, and it took off from there. So now what's good about this is that it signifies a trend change. And the reason it does that is that if you think about what a trend actually is, I've used this program for years, and I still forget where things are. So if you think about price action, blue line representing price, is you put in a high, right? Then you get a retracement, which would be a higher low, and then you put in a higher high, and that will continue on and continue on. Now, how do I know when price is going to reverse? Well, the first thing you would look for is a break of a higher low being here, and then you would want to see the lower high put in and then a new low. So that is what you want to look for at its most basic level of looking at price action. So you have price action starts here, you have a high put in, you get your retracement for a higher low, you get a higher high, higher low, higher high, and now you've broken this higher low. So that means that you have a trend change. So if you come down here, what we can see is that we've actually broken a lower high. Came down, we double bottomed, and we moved off. So now what I'm probably going to end up seeing, or at least what I would be looking for, is a bounce off of this 50. It doesn't mean that it's going to retrace here. It could go up. Price action could climb up here and then take a 50%, but I would be looking for one of those at some point. Another thing that is of concern about this area is that, or really more why we're seeing it stall there. So this is your volume profile. Now, what I'm concerned with at a low volume nodes, because that's a lack of price acceptance in that area, it means one of two things. Either price will stall there and pull away and pull back into where you have more price acceptance, or it will move quickly through that area. So if you look here, you can, damn it. There it is. So if you look here, you can see that low volume node is exactly where prices had stopped, and where you have higher volume traded. This is more price acceptance, meaning that price has traded here in the past, and it's been accepted there for a while. So that's naturally where that price is going to pull back to. And as you can see, as the volume drops off there, that's where you're going to find your support. And you can see that in the price action. If you look, you can see a little bit there. But if you come over here, you can see we're traded in that area more here, here. And so that's what it's measuring. The volume profile is going to show you so if you look at volume here, it's measured by time. This is measured by price. So at what price did we see the most amount of price acceptance and price traded, which would be this area here. So short term, we might get a little bit of a pullback here. I can't really say whether we will or not, because, well, the trends can continue for a long time. So that's not really how you trade. Anyway, so what I want to see is a move back into this area where we have more price acceptance in between the dotted lines here. And that would look very healthy. That would also get us above the, where is it? Oh, come on. Oh, that's an ugly bar. Hopefully we finish out the day stronger than that, but that's not a pretty bar. That's actually a pretty bearish bar. What the heck was I going to do here? So the good thing, though, is that we have the yellow line here is the 55-day moving average. So that's the 55 exponential moving average on the daily chart. So the fact that we've gotten back above that is good. I want to see us get back above the 21 EMA, which is the green one, which would put us back into that range that I was just talking about. But that's essentially the update of where I'm looking at for the technical analysis on AMC. Even though hedge funds manipulating it, real technical analysis will always work regardless of manipulation. In fact, you can see the manipulation in the chart, as I've shown y'all with the measured moves. And you're still going to be able to tell where you'll see likely reactions based on low volume nodes. Technical analysis works. The trick is finding someone that knows how to do actual technical analysis on a security. Stay away from oscillator indicators. They're worthless. And that'd be like RSIs and things like that. But yeah, so that's pretty much all I've got for y'all. Kind of running out things to say, but I'll try to keep y'all updated. All right, take care.